If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
All right, good morning everybody. Welcome back to another show. Hope you're doing well and surviving these crazy markets. Yesterday, we talked a lot about the 200-day moving average being retested on the S&P 500. We also talked about the 200-day moving average on gold and how we actually narrowly missed that area when it came to price action on gold. We tested all of the major moving averages on the gold market. We narrowly missed the 200-day moving average. I mean, you really have to squint to see it, but we did not technically hit. See, there it is. That's where we're talking about. We missed the moving average by just a tiny little amount there. But anyways, I want to talk a little bit about gold here today. I wanted to talk about the stock market. Gold is a fascinating move. I think we should talk a little bit more about this here to start off today. S&P 500, as we discussed yesterday, failed out at that 200-day moving average, at least for now, despite what was perceived by the markets as good news. It showed intent from the Trump administration, the U.S. side of things, to de-escalate the war in the Middle East. That was perceived very positively yesterday. However, and so, by the way, so did gold love that. And people are, I mean, you are seeing some fascinating times right now, because this sort of thing is very frustrating when you're talking about gold going up because wartime might come to an end. Very fascinating. But it does make sense when you are a macro trader. When you understand it, when you piece it together, you say, okay, wait, hold on, let me think about this. If oil prices drop big time because and that also leads to inflation coming back down or not ramping up too much, what does that do to interest rate probabilities? Well, that would bring back rate cuts. Bringing back rate cuts is very bullish for gold. It's kind of confusing, but that's why we're here, guys. We're here Monday through Friday to keep up to date on this stuff. I know you guys, a lot of you, shout out to my regular people in the chat. I see you here. Good morning to see, good to see Tiger in the chat. Lee is in the chat. We got Ball Out in the chat. We got everybody here. So thank you for being here. I mean, this is why we do this Monday through Friday. This is work, right? We are putting in the work all the time to stay up to date on these markets because they're constantly changing. It is understandable why people right now have had a really tough time trading gold. It's a very popular thing to trade. And I think a lot of people got really blindsided thinking, clearly this is an easy dip to buy with a war breaking out in the Middle East, right? But this is why this is why markets are humbling to even people who have some experience. If you've been trading gold and you've been making money on gold the last few years, I know, not a lot of people are going to walk forward and claim this, but I know a lot of people are silently giving back everything, right? They're giving back all their profits. They've messed up big time because they got wiped out thinking gold has to go up. It's a war. Not so fast. Markets will always find a way to remind you that they're the boss, not us. We are here trading what we see. We're following trends as best as we can, but nobody knows with certainty what's going to happen next in markets. And the big thing here is we're every day learning something. You and me both. I mean, I'm still learning stuff about the markets all the time. But the thing we have to understand about this is we cannot be lazy. If you're going to trade gold, if you can trade anything, you can't be lazy with it, right? War does not instantly mean gold go up, right? Because the focus and the reason, understanding where we're coming from here with gold, you had one of the most incredible run-ups we've seen in decades on gold. What was it based on? Rate cuts globally, not just in the US, global rate cuts, inflation coming down, things improving in regards to interest rates coming lower. That's going to cause a bunch of fiat currency to get printed by central banks as economies were showing some signs of cooling off. Inflation was cooling off too. That's a sweet spot for gold. Now what you have is a very difficult circumstance, in which case you have that rate cut story getting destroyed, right? Let's go take a look at the 10-year. This is why the dollar's been strong. This is why gold has been under pressure. This is why bonds have been sold. This inflation expectation spike due to the whole Middle East conflict is destroying probabilities for rate cuts. Let me explain something. When we went into this year, when we came into 2026, we were expecting 2 to 3 rate cuts from, I'm talking about the Fed, right? That put downward pressure on the dollar. People kind of thought, okay, jobs market cooling. Remember that story? I mean, still a story, by the way, but jobs market data is cooling. Fed is on our side. Inflation's cooling. We can cut rates. We should be able to get 2 to 3 rate cuts this year. That's how we came in 2026. This Middle East situation took all that and just blasted it. Now we're expecting 0 rate cuts. And get this, we have a very slight possibility that in the end of the year, we could see a rate hike. I saw a post yesterday that some short period of time into the Bush administration's Middle East conflict in the 90s or in the 2000s. I don't know which one it was. I don't know if it was senior or junior, but anyways, like a couple weeks in, they declared victory on what was going on in the Middle East. And the war proceeded to go on for another 8 years. Could that sort of thing happen here? Let's hope not, right? Let's hope we don't get into a forever war. But it could happen. And we talked a lot yesterday about the posturing of these sorts of events, how everyone tries to walk away looking like a hero. If there is some sort of ceasefire, et cetera, that's how it will all get played out, is Trump will walk away looking like a hero in his mind and hint to his followers. And then at the same time, the Iranian, leadership will do the same. We'll see if we get anything like that. But for now, it is jumpy headlines, to say the least. You have one day the market's excited that, maybe we're going to get a ceasefire. We talked about this yesterday. Watch that 200-day moving average. I stand on that still. Take a look at how we have rejected this 200-day moving average from the downside. And look, I do hope that we genuinely see some sort of resolution because, bear markets are no fun, man. Recessions are no fun. A lot of people get hurt in recessions. And you know who gets hurt the most in recessions? People who are already hurting, right? Lower end consumers, those are the people who lose jobs. Those are the people who get hurt the most by inflation. So let's hope that there is a resolution soon, and that we don't go into some sort of long drawn out conflict that spikes inflation for years to come, right? Let's hope not. So far, however, the price action here is something to consider. Also, I just want to address one little thing. Somebody yesterday said that my bias is showing, that I'm like super anti-Trump about this. Back in April, when Trump was doing the tariff stuff, I bought the heck out of that dip because I felt that was something that could be taken away by the Trump administration. I also gave the benefit of the doubt to the Trump administration, I think they know that they want the stock market to do well. They know that they are, erred on the side of thinking they're hardball negotiating. And they were. I mean, they got a lot of deals going and things in many ways have improved since then. In this case, however, the challenge that I've pointed out, and not just me, many other people, has been that this is not something that you can just sort of pull the plug on without Iran also agreeing, right? This is when you have geopolitical conflict like this is not just up to Trump to say it's over. You have to get both sides to kind of say the same thing. And that's where I think we saw such a violent intraday reversal, right? Iran kind of shot down the idea that they had talked and things had been going well. However, we'll see. We'll see how it plays out. I do hope for, as most rational people do, some sort of peaceful conflict resolution soon. Anyways, let's talk a little bit about where we are at in other markets. Again, gold continuing to push lower. I actually did a bullish trade on oil. On gold yesterday. I sold puts on GLD. I sold the 360 puts out, I think like 30 days out or so. And so I collected some premium for that. If gold continues to rock lower, then I'm going to start buying some gold, specifically through the gold shares ETF GLD. So I sold puts on this one with willingness to own some gold if that thing does continue to push lower. Now, for doing that, what is this put selling? Well, I'm not buying gold right here, right? What I'm doing is I'm saying I'll buy it if it goes down here. If it never goes down there, I still collect the premium that I collected, or I keep the premium that I collected. Let me see if I can show you just a little bit about that trade. Now, I know I don't talk a lot about options, and I'm going to keep this very brief because people don't really love when I talk about options. It's just not this channel's focus, which I totally understand. But if I'm going to just pull it up here, gold only. I'm going to display complete. Here we go. Okay, so what I did is I sold a put. Now, when you sell a put, I sold 4 puts out to May 15th. I collected $7.30. So my max profit on this trade is $7.30 times 400 shares, which is what I said I'm willing to own. So I collected $2,920 of premium for selling a put, right? So what that means is that I have to buy the shares, right? When you buy a put, you have the right to sell shares at the strike price, no matter what. When you sell a put, you agree to buy those shares at that strike price. And in exchange for making that guarantee or that contract, you collect a premium from the put buyer. So as the put seller, I sold puts way down here. So if gold continues to fall apart, I'll buy shares at $360 per share on GLD. Now, why is that a bullish trade? Well, because if the stock or gold, right? If gold goes sideways, I keep the premium. Well, I keep the premium no matter what. If gold goes up, I collect my full premium. I make that $2,900. If gold drops, but not by very much, I keep the premium and I just take the max profit. If gold drops very hard, then I'll have to buy it at 360, which I'm comfortable doing. So that's the option side. Without getting too options heavy, basically, I have a cautiously bullish outlook on gold from a longer term perspective. Now, from a short term trading perspective, I actually would not be surprised at all if we continued to move lower. The momentum here is to the downside when it comes to price action on gold. You have a strong dollar right now. You have yields that are rising. That is just a tricky dynamic for gold here in the short term. Long term, like I said, I think you're getting some decent value, and I would love to get a price pull back into like the 4,000 region, which is where approximately I sold the put. 4,000 to 4,200, somewhere in this range. I'd be happy to own some gold for the long term. Why 360? Can you explain? Yeah. So GLD, right, is a gold ETF. It's not one-to-one with gold in terms of its price, but it moves percentage-wise just about the same, generally speaking. minus expense ratio stuff, etc. But generally speaking, gold is just another way that you can hold. It's actually a very efficient way if you want to hold gold for a longer period of time. GLD shares, which is something available in stock brokerages. I think even Europeans can trade GLD, but don't quote me on that. But it's a great way to hold gold at a very low cost, very low expense ratio, etc. Anyways, what's nice about that is I like the idea of buying gold, but I'm not in a rush to do so. And I think that it's more of a long-term play and not a short-term trade. Short-term trade, if I had to take a position, I'd be looking for bearish setups on gold. Long-term, like sit in the account for 3, 6, 12 months, I think gold's a decent buy. Personal opinion only, not financial advice. You do what you want to do, but I am playing the option side of it because it is capital efficient and I can collect premium and only really would have to buy gold if it got to a level at which point that I think it's like on super sale. Hey, I got something exciting for you guys. A lot of you who are regular stream viewers have never tried the EdgeFinder before, and it is time, my friends. We have it right here below my camera. We are doing EdgeFinder free week. If you have never tried EdgeFinder and you want to try it out for yourself, this is a no strings attached. There's no cost. There's no credit card you have to put down. There's nothing like that. You can currently try it out for free. We're doing a free week. And if you're here with me right now, perfect timing because you just kicked it off. So you get the full week, right? This ends March 31st. So you've got a nice stretch of time to explore our tools and see what we have to offer. What's the hype about? We have a lot of traders around the world who use our tools, and we do this as transparently a way to market our product and to share it with a lot of people, because our thought is you're going to try it, you're going to love it, and you're going to want to buy it, because next month we're doing a huge discount on the product. So if you've thought about the EdgeFinder for a while, you're like, yeah, maybe it would be useful. Well, here's your chance to find out for sure if it would be useful for your style. Scan the QR code or click the link that's just been dropped in the live stream chat, thanks to our producer here behind the scenes, and take advantage of the EdgeFinder free week while that lasts. Gives you a chance to explore the tools that we talk about so frequently, click around for yourself, explore all the different features and how they function, how they might factor into your own approach or analysis to markets. You can do some back testing in here. A lot of people like to back test it while they're in here. And again, there's no cost, no credit card, etc. Only thing is that by putting your email in there, you will start receiving some of our email, like our promotional offers. If we have a discount coming up, etc., you will start getting that. But you can opt out at any time, and there you go. Enjoy it. I do also want to ask a favor. I do this every single time when we do a free week. We don't do them very often, but when we do them, I do always ask for a little bit of feedback from you. Even if you never plan to buy it, if you enjoy it or you don't enjoy it, either way, comment something on our socials. Let us know, hey, this feature was great. I really liked this feature. Or, hey, this feature just wasn't quite what I was expecting it to be. It wasn't good enough. We take that and I promise I'll never cry more than 20 minutes based on a comment that you leave that's not nice. Okay? 20 minutes maximum. That's all I'll give you in terms of crying time. If you're a SpongeBob OG, you might remember that one. There's like one time where SpongeBob's like, I only cried for 20 minutes. Anyways, if you didn't grow up watching SpongeBob, I'm sorry. I'm sorry your parents did that to you. Anyways, let's see. Let's see. Christmas in March, EdgeFinder free week. Yes, sir. I remember you did doing this before. Didn't take trading as serious, but I'm glad I get the chance to do it now. Thanks, Nick and the team. Hey, yeah. Again, please take advantage of it. Nick, are you not afraid of reverse engineers cracking that free version? My man. Nothing that we have within EdgeFinder, like here, full transparency, EdgeFinder is a bunch of free data. People try and say that sometimes. They're like, why would I pay for this? It's all free. Bro, you show me where. Yes, individually, you can go grab pieces of information. Like you could go get like the latest CPI statistic from a website. But if you had, and I used to do this, so I know exactly, this is why we built the EdgeFinder. You have all these data points. You can go individually pull them up, do searches, pull it up, etc. But what's nice about EdgeFinder is it packs it all into one spot, and it offers visual charts to help you understand what's going on. Like if, for example, if we take a look at put call ratio, it's one click away from me at any time. It's all in one platform. Instead of having to go, do research, chat with ChatGPT a bunch to get answers, I just have it all pre-packaged and ready to go. As a trader, like I use this thing, right? So I use it every single day for my trading analysis. And when I'm using it, the convenience factor of and the educational factor of having the visual charts as well as the data ready to go, pre-prepared for you, and maybe even more importantly, this thing's built by people who have traded and become successful in the trading world. The prompts that have been asked on your behalf already, that's the intellectual property that is really powerful within EdgeFinder. There will always be copycats, people, etc. The secret sauce is having it built by real traders themselves. That is the secret sauce. Because there's a lot of developers out there building all sorts of different things. What I think we really specialize in EdgeFinder is the way we showcase it, the way that the prompts being asked are prompts that are important to professional traders. Like that's a big part of it that is underestimated and underappreciated. The other big thing is that when you use EdgeFinder, I know I'm going off on a rant. I apologize. We'll get back to charts. When you use EdgeFinder, data breaks, systems break. If you try and build the stuff yourself, you will run into the same issues that we have. Stuff breaks. You have to constantly be fixing and improving, and people want new features, or people want to change this, or people are complaining about this, or people are excited about this. They want more of these things. We do that headache for you. You as the trader, you pull it open, and every few weeks, new features pop up. You're like, this thing just keeps getting better. And I'm not doing anything other than trading. I pay one time. There's no monthly fee to it. You pay once and you're in, and you just get to reap the benefits. There's people who bought it 4 years ago who have just sat idly by watching as this thing has just turned into more and more of a beast. And that's the purpose. We want to reward people who stick with our software and supported our work. So yeah, anyways, appreciate you on that. I appreciate it, guys. Try it out. It's free to use this week. Anyway, sorry for the long, I didn't mean for that to turn into a super long promotional rant, but it is worth trying out. Okay, so let's take a look at the dollar. So the dollar has topped out, at least for now, in regards to where we've been at, right? We saw the 100.5 level get tested. I do think that you're probably looking forward to, let's see if we can go economic heat maps, US economic heat map. Let's see, when do we have new data coming out for this stuff? Like, when's our next CPI? So we had CPI fairly recently. We obviously have coming up the jobs report. That will be very big because last time we had a really bad jobs report. So depending on how the jobs data comes in, right? If you start seeing, if you start seeing JOLTS job openings, ADP numbers, initial jobless claims, of course, we have that this day, right? If you start seeing those things materially weaken, that will be a little bit more concerning to the US dollar. But currently, US dollar still has a decent score overall. If we take a look at this, it's New Zealand dollar. Let's look at US dollar. Technicals have flipped a little bit more bearish here recently, again, topping out at that resistance point. However, the fundamentals still look pretty solid. The jobs market bias, we had weekly jobless claims, which were strong. We'll watch that Thursday to see if that flips. ADP was strong. JOLTS job openings were strong. Not so strong, non-farm payroll, unemployment rate. Inflation, also sticky. This is bullish dollar, right? That rise in the yield, right? Sticky oil prices, rising yields on inflation expectations. That's a tailwind for dollar right now. If you do see geopolitics cool off a little bit, the dollar index is likely coming down. If you see geopolitics not cooling off for a while, then you're probably more in the dollar bullish camp, right? Because that's a big driver here recently to this this surge in dollar strength has been inflation expectations getting kicked up a notch partially due to geopolitics. But to be fair, inflation was starting to tick up even before this. So we'll see how it all plays out. But that's again why I kind of stay cautious on gold in the short term. And look at oil. Oil's up 4% here today. So you are seeing a bounce back in oil price. I think if you're watching oil from a technical perspective, this level of support, we'll see how this behaves. You know, you're getting a bid on oil today. If you are very bullish oil, then you probably want to see us clear that top end of the range. And from there, actually stay there. So oil kind of broke my heart this Monday. I ended up getting stopped out for a small loss, but it feels painful because it was a good-sized winner. So I was long oil in this area, right? So I went long oil, and then basically we had an attempt to move higher, but we did not quite clear that with conviction. And so what ended up happening is we tried to go higher. I didn't trail my stop, but I did trim my stop loss. So I had an initial risk, let's just say, just for example, I had a bigger stop loss. I trimmed it. And I'm glad that I did, because I ended up giving back a lot. I ended up giving back all the profit that I had open, which was no fun. But I didn't take the full loss, which I would have had I not moved my stop. And these are the little things, because on one isolated trade example, if you're looking at that, you're like, well, dang, your strategy stinks. You should have taken profits at the top end. Well, yeah, on this iteration. But trading is not about one trade. It's about, if you keep taking that setup over and over and over, what does the distribution look like, right? Because a lot of times you are just going to have those moves. You can't avoid that. If you take profits, you know, if you're like, well, I take my profits because every time I don't take my profits, I give it back. All right, well, what about the times where you have the monster runner, and let's say you were long oil here and you took profits here, and then you missed this, right? You cannot come to some easy conclusion about the best way to exit a trade. You know why? Because it doesn't exist. Because no matter how you choose to exit, there are pros and cons. So obviously, I'm a little bitter about getting stopped out, but I know I'm not going to change anything about how I do it next time. That's what retail, kind of traders who are stuck in the losing pattern do. Every time something happens a certain way, they take this and they assume that's what's going to happen next time too. Whereas that's a failed conclusion, right? You can't just conclude that the way oil did this move is how it's always going to go going forward. That is foolish. Back testing says, given this setup or something similar to it, if I do it 1,000 times, what does the average trade look like, right? And I like trading commodities quite a bit because sometimes you get the ridiculous moves, and I trade for those ridiculous moves, right? So what I mean is I like to trail my stop loss. I like to let that winner run and run and run, knowing full well that a lot of times I get this instead, right? The reason I'm harping on this is because it's so frequently the case that people will let recency, what's happened to them recently, change the way they approach the markets. And if you do that, you will be stuck chasing your tail forever, because markets don't usually repeat exactly the same way every time. Instead, find something that you accept. If you're somebody who's like, I do like to take my profits quick, cool, do that. That's perfectly fine. But acknowledge sometimes you're going to miss the big one, and you're going to be kicking yourself because you're like, man, I took 1.5 R and it ran 30 R, right? It's going to happen to you too. There's no perfect way. Find something that you like and that you accept. Back test it. Make sure you're comfortable with the pros and the cons, and embrace the pain, because that's what trading is. We have PMIs coming in. Somebody said, Nick, PMI. Do we? Am I off? Oh, we have flash PMIs coming out in 15 minutes. All good. You guys are in good hands, because up next we do have Alan Perez taking over the live stream. Hey, real quick, I mentioned it earlier, but if you are not already taking advantage of our EdgeFinder free week event, It is happening right now. Scan the QR code that's below my camera or click the link being dropped here in the chat to sign up for our free week event. No credit card required, no hidden fees or any sort of gimmicks, no strings attached. Try out the EdgeFinder this week, give us your feedback, and full transparency. We have a big sale coming next week that if you like the EdgeFinder, don't miss the opportunity to take advantage of that big discount that is coming your way starting at the end of March. Okay, guys, up next, you have Alan Perez just after this quick break.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hey, good morning, everyone. Don't go anywhere. We'll go ahead and go over your favorite asset classes. We'll go over stocks or equity indexes, Forex, commodities, gold, oil, all that good stuff. And like always, if you guys have any chart markups that you want me to go over, maybe you're in a trader looking to go ahead and get into a trade, go ahead and drop that into the comment section. I'll be more than happy to go over that with you and just give you my honest opinions. Again, nothing is financial advice, but I would love to kind of help you out on that front. Someone said here in the comment section, Rad, hey, Nick, awesome content. Thanks. Quick question. I'm no expert on the analysis. How would you combo those econ indicators into specific long short indicators or score? Great question. I think you're talking about the EdgeFinder there. Essentially what it is, there is for a certain asset, there's certain data points that make an asset strong or weak. And so every single day or every single week, there's an economic calendar and there's new incoming data. And so let's say an economy is overall strong and you get, 3 data points this week. Maybe you get like a CPI print and a labor data print or something like that, new incoming that will affect the overall score. And it'll either weaken it, give it a net positive or a net negative, effect on the overall economic health. And so when you have something, for example, like an economy, like for example, the US that has everything going for it, that'll give it a strong reading. So you'll probably see, the dollar strong or equity strong, vice versa. So yeah, hope that answered your question. New Zealand CAD, I see that there. Awesome. I will definitely go ahead and look at that. New Zealand US dollar. I'm actually in Kiwi dollar short. So pound dollar pullback. Morning, Alan. Hope you had a blessed week. I did, man. Thank you, Ballad. I hope you did too. Play some good pickleball. So I'm very happy, very recharged. Thankfully here in Austin, the weather's a lot better. So super happy there. Okay. Can you look at Kiwi dollar? Of course. So let's go ahead and talk about we'll go ahead and talk about oil, the dollar yields, because that will ultimately influence Kiwi dollar, pound dollar, euro dollar, everything like that. So oil is getting a little bit of a pop today here. This morning, nothing too crazy there. It seems like markets are pretty much digesting what happened Monday. So for those that don't know, you had this crazy price action in everything, basically. And what happened was the president, Trump, went ahead and essentially backpedaled his ultimatum, that 48-hour ultimatum, and bought him some time. Instead of the 48-hour notice where he was going to go ahead and strike their energy infrastructure, he basically said, you guys have 5 days now. And within 5 days, it'll be over. And so that, instilled a lot of risk on trading. You saw equities up. You saw gold, or not gold, but you saw oil. Well, actually, gold did trade up. You saw oil lower, the dollar lower. But then a couple hours later, as the trading day developed, you did see Iran said, hey, we didn't talk to anyone. They reached out, but we never reached out back to anyone. So, now you're seeing oil trade back up into this level here, this 92 handle. From here, I don't know what happens, right? If you see some kind of a resolution happening, let me pull up the Epic pen here. If you see some kind of a resolution, then perhaps it's not going to work. Damn it. Then perhaps oil, bounces off of this 92 handle and trades lower. That's a possibility. Or if you see, prolonged or like indecision, maybe we start trading back into the range here. But again, you guys asked me about Kiwi dollar. So what does this mean? If you see a pop in oil, most likely dollar is up as well. And so then Kiwi dollar will go ahead and fade to the downside. So this is the current trade I'm in with Kiwi dollar. It is slightly in profit there. We were definitely in the negative. Actually, you can see I was very close to getting stopped out there on Kiwi. But I think that, we're in this level of what could be support here. Let me just go ahead and delete this so you guys can see clearly here. But you have essentially the Kiwi trading on what could be, this level of support. And if it fails, it could turn resistance, right? You do have this 200-day moving average here in yellow and this 50-day moving average in red. You can see that they're actually starting to cross over, which is good as far as bearish technical structure there. So we do have a level where I think you can find some kind of support. Again, this Kiwi dollar or the Kiwi dollar on daily time frame is quite ugly as from a technical basis. It's not that clear to me, in my personal opinion there. But maybe if you trade back into this level here, this 57.5 level, that could be some support there. So that's kind of like a target that I'm looking at. But essentially, if you continue to see some escalations in the Middle East and the dollar get the bid, then I do think Kiwi dollar to the downside would be the path of least resistance. Now, let's say that, and this is where you get into the little nuances stuff. Let's say that there is a resolution, then most likely than not, the dollar safe haven pricing will have to get priced out. And so then you will probably get a pop into the Kiwi, into the euro dollar, pound dollar, all that good stuff. But I think even with that, maybe you get a little bit of a pop in the dollar or a pop in these assets. I'm still looking to fade them overall. So maybe I'll get stopped out and I'll look for a chance to re-entry. The reason being is because the fundamentals behind these currency pairs here, for example, go ahead and look up the Kiwi. Is very bearish, right? You have growth going against the Kiwi, the jobs market, sentiment, from a technical standpoint, what we just covered, all against the Kiwi dollar. So I still think that even though you do get some kind of a pop there, I'm still looking to ultimately fade it to the downside. Same thing with the euro dollar trade that I'm in. It's getting a -6 reading there. So still, and you can see here, if you look at the bottom left here, the score for the euro dollar has been consistently bearish, besides this low pocket that we saw from March 5th through the 11th. But for the most part, it's been getting a bearish reading there. So even if the euro dollar does get a pop too, I'm still looking to ultimately fade it. So that's kind of my thought process there with the Kiwi dollar and euro dollar. I'm curious to see what the score is for pound dollar as well. Let's go ahead and see here. Pound dollar is getting a neutral reading, so don't know about that one. We'll go ahead and see. Another thing that could actually happen too for for euro dollar, right? Let's say you do get those higher inflation prospects, right? They're struggling with growth, right? So if you add inflation rate hikes on top of an economy that's already struggling with growth, that's not the best thing, right? So that could continue to hurt the euro dollar, and that's why I do like this pair short here. Again, this one was a more drawdown here than the Kiwi. Again, I'm looking to target this level of what could be here. I'll clear this out here too. Support here, this 1.1400 level. You can see that we've reacted to it before here very recently, March 13th, and again here on July 31st, 2025. So that's kind of a level of support that I have in mind, a potential profit target. Again, if you have the dollar index breach this 100.5 level, then I would go ahead and trail stops by just trailing below this structure here, this support that would probably turn into resistance. So yeah, that's my thought process here. Okay, let's see. Alan, have that problem sometimes too. I just opened Task Manager. Yeah, so that's actually what I've had to do here to fix it in the past. So I could actually do that. Task Manager. Let's see. Epic Pen. Okay. Let's pull it back up here. Sorry, guys. There you go. Cool. All right, cool. Now I can show you my handwriting on this when I do the Epic Pen. I say this to myself, like, Nick has some pretty good handwriting. Chris Pulver too. When they do the Epic Pen, I'm left-handed and I'm navigating the mouse with my right hand. So when I draw stuff or try to write something, it's you can't read it. So my fault there. So okay, cool. Let's go ahead and look at the charts here. in the comment section as well. So US 30 is one thing that you guys want me to go over. Dollar yen here. Let me go ahead and catch up here. Silver. Okay, I'll just go down the list. No problem there. So essentially with currencies, right? I'll sum it up here very briefly. If you get a de-escalation, dollar index goes ahead and falls lower there. I think some support will be there at the $98 handle, that 200-day moving average, that 50-day moving average. From there, it is a question of, does it continue lower, or does it find some support and it continues drifting higher? At that point, what I would go ahead and do is just reference the EdgeFinder, because you have some economies like the Aussie that has high inflation, right? So they're looking to hike rates no matter there's escalation or not. And so that one will be a little bit stronger, right? Versus you have something like the Eurozone where they're trying to stay neutral, right? Or the Kiwi where they're trying to cut rates, right? So it will very much depend at that point. So if you get a de-escalation, dollar index slower, I will go ahead and reference the EdgeFinder for the top setup scores and all that good stuff, and then move from there. If you continue to see an escalation, I hold on to my trades. I manage them. I show stops. I try to trim risk as soon as I can, and I'll just let this thing go higher. I think 100.5 there for the dollar index will be a very strong level of support. And then if you break that, obviously, then you play the momentum play and just trail stops below that structure. For gold and silver, I see them trading here red on the day. I think there's some downside there for gold and silver, as long as you see yields elevated, right? So you can see here, essentially the start of the war. This is not what I intended to do. Okay, yeah, we'll do this. Perfect. So you can see here, the conflict started at this white line here. And now you're seeing that the yields in green, all these are the major currencies or the major economies and their 2-year yields here. You can see that they've started to drift higher here in the opposite direction. That is what's hurting gold, right? It's a non-yielding asset. It's more expensive. And also a lot of people are trying to raise cash as well. So you did see that gold initially pop up that 200-day moving average there in yellow. But I think as long as you start to see those stronger yields there, it's going to continue lower. So that's my thought process on gold. If you see a resolution, then perhaps markets start to price out the hawkish stance that they were once in, and then you start to see gold get a little bit of a pop there. Equity indexes, very, very same thing. So a lot of these things are very similar in nature, right? They're all reacting off of the same thing. Higher oil, higher inflation prospects, yields, all that good stuff, right? Global liquidity. So for the S&P, right, you are seeing some bearish technical structure. You're seeing some consistent downtrend there. You're seeing it bounce negatively to that 200-day moving average in yellow. If I go to the 4-hour time frame, and this moving average is static to the daily. So you can see here that we essentially went ahead and did this. You bounce off of that 200-day moving average, traded higher. You bounced off of it again, traded higher. Now you're rejecting this 200-day moving average. I mean, you can see here, even on the 4-hour time frame here, you saw this wick here, but ultimately it closed below this 200-day moving average, right? So I think, for now, you're seeing some very bearish characteristics to this market, and that's very consistent across Nasdaq, the Dow Jones, all that good stuff. And these are some very strong levels of support here. If you breach this level, if you fell below 6,500, then you have open moving, open room to the downside, 6,200 for the Nasdaq. You have open room to the downside, 22,000. Same thing with all of these other indexes. So I think that's going to be a common theme, something that markets are going to be watching for. And to make it very simple, guys, just watch yields. Hey, Marco.
Hello.
How's it going?
I'm doing pretty well. How are you?
Pretty good. Nothing different from my side as far as the escalations and stuff like that.
Yep.
Actually, I just got a financial juice text. Oh, it's PMIs. Yeah, but nothing that I've seen actually from like an escalation standpoint. I saw some minor things. Well, not minor. This is not minor because this is the world we're talking about here. But I did see that there was a boat going towards the Middle East from the U.S. With some Marines on there. But I think that's been discussed before already. So I don't know if that's new news or not.
Yeah, that has been mentioned even last week, I think. So I think they're sending 3,000 Marines to the area, which could mean a ground invasion. And there's still the deadline that Trump mentioned, but no one is paying attention to that because he pretty much lied yesterday about the whole negotiations. So for now, it's just waiting for a new catalyst as far as I can see.
So I went down a a conspiracy theory rabbit hole.
Okay.
It's like military strategy, and these things are so hyper specific. So like, there's no one right answer. But from what I've heard, and it's interesting, right? They're all interesting, right? You can all subscribe to whatever viewpoint it is, but a lot of people were saying that, there's a possibility that he gave the 48-hour ultimatum, and then he walked it back, and he said what he said yesterday, which was 5 days or sooner, and then you have that boat with all the Marines going.
Yeah,
they said the strategists have said that hypothetically it could take up to 5 days to get there to the Strait of Hormuz. So maybe they're trying to get some troops out there and to have a safe escort of all the ships through there. That's a possibility. I'm thinking in the back of my head, face value, if you look at that face value, that's good for oil because you're starting to see the movement from the Strait. But I don't think it would be that easy. I think there would be some resistance. So retaliation or whatever to disrupt that passage. But again, so I don't know how the markets will digest that, right? Face value, you take it like, okay, you're getting escorts out of there. It's good for oil. But then if Iran says, I don't like that, and they start attacking the US, then that escalates to more of a, troops on the ground type war. And then that's obviously bad for oil. So it kind of goes both ways.
Yeah, for me, I read that even if the conflict is over, just to reopen the strait is going to take weeks, maybe even months. So if I put in my oil chart, so still in oil, essentially, because the area has apparently been mined, so the strait is going to take weeks or months to reopen. Second thing is, like, even if the conflict is done, as I mentioned, Iran may not agree. And the third thing is, or even if Trump wants to end it, Iran may not agree. And the third thing is, a lot of infrastructure has been destroyed. And to repair that, I think in Qatar, it's going to take maybe 2-3 years to repair the whole thing. I think they invested like 5 billion and lost 20 billion because of the whole damage that was done to one of the sites. But again, definitely not an expert on the topic. What I'm seeing right now is just risk off, oil continuing to push higher. Yes, we had the dump yesterday. We had the sort of flight into risk on, but that was pretty short-lived. And I think by now, most people have realized that this thing is just going to keep on approaching the high at 118, 119. Aussie dollar is moving lower today. Are you surprised for the Aussie dollar?
A little bit. I mean, I know their overall score weakened a little bit, so I'm not in this trade anymore. So I'll delete this here. But their employment numbers came in a little bit worse than expected, and so that's kind of hurting the overall picture for the Aussie economy there.
Yeah.
I mean, I'm loving it, right? Because I still like the Aussie basket long when the time is right. So I would like to go ahead and trade that higher. So any pullback opportunity, I love it. So, and remember, when we first started trading the Aussie dollar, we kind of like got priced in here somewhere within the middle of this range here. So we're actually getting better prices than what we originally started with. So I like that. I'll obviously monitor the situation. If the overall economic heat map for the Aussie economy gets worse, then I probably start to think about it very differently there. But I do like it to the upside. With oil and stuff like that. I'm thinking that markets are open to the opportunity that there is some kind of a resolution or a cap to upside in oil. That's just my personal opinion. So like, for the most part, oil when it immediately happened, it was gridlocked. I think you're seeing Saudi taking an alternative route. So there's some oil passing through there. It's not as much oil, but it is oil passing through. And you also do have essentially like a toll where you can pay $2 million for your ship to go ahead and pass through the strait, as long as you're not in the U.S., not a U.S. tanker.
Okay. You can pay to Iran.
To Iran.
Okay.
So I think that's also like some kind of oil's disrupted. The supply of it is disrupted, but not severely disrupted. That's why I do think that you have some kind of a cap at the moment. So maybe this 100 handle here or this 92 handle here could be somewhat of a cap. But nonetheless, if you see elevated oil for an extended period of time, that's going to start trickling into these economies. And so maybe you don't get rate hikes, aggressive rate hikes, but you do have the stance of like most central banks are going to stay put until it passes through. And no one really knows how fast it'll pass through. It could take 60 days, it could take 90 days, however the case may be. So that's kind of my thought process there. So when it comes to my trades, I'm going to let the trades play out. I'm short Kiwi and Euro, but I'm also looking to mitigate that risk as I can, and kind of trim it as much as I can. But how about you? How are you? I know are you still positioned dollar yen to the short side?
Same thing. Yeah. I have 4 or 5 positions. Let me see. So I have the Euro Swiss buy, which is pushing up today, while the Euro dollar is going lower. So I'm not sure if this is probably some Swiss franc weakness, if that makes sense, because again, Euro Swiss up but EU down. That's kind of weird. I have US oil long, which is just below break even. I have USD JPY short, of course, betting on the level of 160 to get defended, and I have a Euro dollar short. So 4 positions. Are you around break even on your EU short?
No, I'm actually also too in a little bit of drawdown. I think I'm like 50 something pips away from break even. Yeah, I was looking here at currency strength. Yeah, it seems like that Swiss basket as a whole, Marco, is kind of tanking there. You can see in the brown line.
Okay.
And then you do have Kiwi and Aussie here leading the path downwards, and you're actually seeing dollar and Canadian dollar higher, which makes sense because you're seeing oil, and so if there's higher oil, safe haven benefit dollar, then obviously the Canadian dollar benefits from that. Someone said in the chat, dollar CAD long. What do you think? I've voiced this many times. I think dollar CAD is a tricky situation because you're essentially trading at the moment in the current environment that we're in 2 strong currency pairs. You have the dollar, which is appreciating from that safe haven flow. And then you have the Canadian dollar, which is somewhat pegged to oil. And so if the dollar is up, most likely oil is up as well. And so you're trading essentially 2 strong or relatively strong currency pairs against each other. From a technical basis, it's been chopping around here. Now you are looking for what could be a breakout here. So if I just delete this bigger support level that I have and I just go to like a 4-hour time frame, this is basically what I'm looking at here. 4-hour time frame, you have support, resistance. You've been trading within the range for about, am I blind? 60 days. So just choppiness, but then you are, if you do get a pop breakout, you're going to run into this 200-day moving average, right? And another level of what could be resistance shortly thereafter. So I don't think dollar CAD would be a wise one. I like Aussie CAD. Aussie CAD is strong, relatively strong there. So if I look at it, Aussie CAD's, well, dang, never mind. Falling off cliff there. But essentially, try to find yourself a currency pair that's if the Canadian dollar is strong at the moment, find yourself a very weak currency pair and trade against it. So off the top of my mind, I would assume that New Zealand CAD is to the downside. Kinda. Yeah, I guess I wouldn't really trade Canadian pairs right now.
Yeah, I agree. I mean, in the Forex game, it's all about pairing a strong currency with a weak one. So you don't want to do USD CAD. You don't want to do the CAD with, let's say, what would be the strong currency at the moment? Maybe the Aussie.
The dollar.
Not really.
The Aussie, yeah.
I would say just the dollar at the moment, but I wouldn't trade USD CAD at all. Let me just bring it up here. USD CAD. For me, this is just flat. And yes, you were absolutely correct in saying that the CAD is connected with the price of oil, but I think just the safe haven demand for the dollar outperforms that connection. And if the dollar catches a bid, this chart is just going to go up and break this resistance level. At the end of the day, I think there's better opportunities out there. I think there's better opportunities in, let's say, of course, buying the Euro Swiss, not anymore, but buying it near the intervention level, or of course selling UJ at 160, or selling EU, and potentially even selling the Aussie dollar, which is today having a pretty bad day. And yesterday was supposed to be a bad day, so supposed to be a bearish move. But then, of course, you had Trump come in with the statements, which pushed the price higher. But looks like today we are following through on that initial Monday bearish momentum. So if we break the support level, I think the Aussie dollar actually can slide even lower. Because as you mentioned, also something, I think you mentioned it yesterday, you had the RBA, which was already hawkish going into this whole thing. But now every central bank is hawkish. So a sort of a repricing may be needed, because people were pricing in the RBA as being the only hawkish central bank for 2026. So that could be another bearish case for the Aussie. So we have a bit of a difference in opinion there. I know you're looking for buy setups a bit lower. For me personally, I'm actually bearish at the moment, especially if we break that support level. I think I like the idea that you had with the repricing. And I think hiking into this sort of an environment is the same thing as the ECB hiking in 2008, 2011.
11, yeah.
And 2021 or 2022, I'm not sure. They were hiking into an oil shock. And hiking into an oil shock, at least looking at the historical examples, doesn't really pay off for the currency. Usually it ends up being long-term bearish for the currency. At least for the euro, we're going to see if that translates into other currencies as well. What do you think about gold? So
Gold?
we had... sorry?
Gold, I think it'll still continue to be under pressure until you see a clear sign of central banks starting to flip their stance to from a hawkish stance to like, okay, we can start waiting for this to pass through. Once it passes through, then we can start to continue with because most central banks were trying to ease rates or hold their rates. Like the Eurozone was already near that 2% mark, so they were trying to hold. Until you see that, I think gold will continue to be under pressure, at least until you see yields kind of go back to where it originally started before the war. So you can see this white line here. This is where the conflict started. And then you see that global yields across the board, the short end of the curve, were trading higher and higher and higher. And so I think if you would need to see at least yields go back to where they started here. So for the Aussie, in this case, trading it back lower here, for the US, trading it back lower here, et cetera, et cetera. So that's kind of my thought process with gold. We've said this before. It's not in play. So like there's better opportunities out there. Like, for example, Max brings a very strong point here when it comes to trading the Canadian dollar. CAD Swiss, right? Canadian dollar is strong right now with oil, and then the Swiss basket is pretty weak. So I was looking at this chart here. CAD Swiss looks pretty strong, right? You have a pullback into this 38.2. Now I had an alert at the 50, didn't work out, but you traded into that 38.2. And now you have the potential that you if you cross this 200-day moving average here, look at this overall trend here, right? If you start to see some moving averages flip for the long side, and you see a continued Swiss basket that's weak, then maybe this may be a sleeper pair. So I'll definitely investigate that further. But when it comes to gold and silver as well, you had these crazy move higher there. With silver specifically, there was a post that I made for the A1 Trading Instagram, and it was essentially like when you fall 20% or more from the highs, the forward-looking returns are lackluster. So you add that historical theme plus higher interest rate prospects around the world, it's just not a pretty picture for metals. Unless you see a clear technical reprice, a V-shaped recovery, something like that, and EdgeFinder telling you that it's bullish, I would just stay away from the metals.
Cool. One thing that I'm seeing online, the main struggle for investors all over the world is finding a safe haven at the moment, because everything is falling. The only thing you can do is maybe go into cash, go into the USD, because that's the only thing that's actually going up. Or, of course, you can go into oil, but is that really a safe haven? I wouldn't say so. But like crypto, crypto is staying flat, but no one knows really the reason behind it. Metal's selling off, which is again crazy. We have been commenting on that for a while now. And even the currencies, the yen, it's not really catching a bid. And the Swiss franc, You brought up the chart of the strength and weakness for today, and the Swiss seems to be selling off. So the only thing that's actually moving seems to be the US dollar as a safe haven. And from what I can gather, the investors, they don't really like buying the dollar, but it's the only thing they can do at the moment. So go into the DXY. The rest of the stuff, the rest of the safe havens are just not working. And can you bring back the chart with the yields that you made? I just want to see what you added on there. Looks pretty good.
I have the VIX here, and I have essentially the 2-year on the bottom left, 2-year and the 10-year yield, just so I can see like the spread between the two.
Okay.
And then this bigger one, I essentially have the 2-year yields for all of the major economies there. So I just type in, like, for example, Australia, AU, and then O2Y, and you'll pull up the 2-year yield, US O2Y, NZ O2Y, et cetera, et cetera. Yeah, but this is something I actually stole this from James. I was watching James' video, and before I had this big list here on the right hand side of my screen, where I would just go down. So I'll go back to this one, where I would just go down the list like this and look at them individually. But he had this cool screen here, so I stole that from James, actually. So James, if you're watching this, fantastic idea, having them all collectively on one screen in a line format. It looks a lot cleaner too. And then I just added the VIX here and the 2 and 10-year yield spread there on the bottom left.
Pretty cool. And so what kind of information can you gather from the spread of the short end and the sort of the longer end, let's say the 2-year and the 10-year?
Usually, like, there's supposed to be depending on how it steepens, or if it's flatlined, or if it's declined, it's a different indication. But like when it comes to trading Forex or like directionists and stuff like that, the 2-year yield is something that traders look for like near term directions for like rate probabilities and stuff like that. The 10 and the long end of the curve, that will influence like buying power, for example, like mortgage rates, car rates, stuff like that. So you can see how tight something can be, or is expected to be. So that's why I like, yields are very underrated. I like them. I've also heard a lot about the SOFR, so the short overnight financing rate. Not something I trade on, but something that I need to look into, because a lot of people that are like at an institutional level, they look at the 2-year yield with the SOFR rate. But yeah, that's maybe we can definitely go down that rabbit hole, because I know my part of the segment here is wrapping up here. But any other charts though that you want to go over? As far as the yen goes, I'm actually with you as far as playing the potential intervention with the dollar yen. I'm not trading dollar yen, but I'm actually trading Kiwi yen to the downside. So it's break even. I have a 200 pip stop loss and a 329 pip profit level. Very, very short trade. But I do like the idea that, the New Zealand dollar as a whole, if I go to the EdgeFinder, is weakening. So I like that. I like the trading a weak currency pair against a potentially very strong pair if the yen or the Bank of Japan intervenes with the yen. I like that trade. The only dilemma is, and this is going to be the dilemma across all of the yen crosses, is that you're getting negative swaps. It's not the biggest at the moment. It's 1.6, but I'm playing with that. I'm playing that essentially with you there.
Awesome.
Have you seen any developments when it comes to Bank of Japan intervening, anything like that?
Very little. I did a filter today in the morning for financial juice. Didn't see much, but you definitely have a ceiling there. I mean, you don't even need to be trading USD JPY to get the benefit of the ceiling, because that 160 level should get defended. Most likely, like, most investors and traders would not like to buy into those levels, especially the guys that have big money. If an intervention actually happens, the buying of the yen should translate on every single currency pair. So NZD JPY should definitely drop if you get an actual intervention. So for me, I like your idea as well, because the risk is very low. Of course, there is risk. Of course, the stop loss can be hit, but you have a fail-safe with the Bank of Japan, with the intervention. And the only negative about it is the negative swaps. But holding it for maybe a couple of weeks, I would say it's not an issue, especially if you can play something with the Swiss and you get positive swaps. So if you're
That's what
looking
Max said. Yeah, Swiss yen. The only thing with Swiss yen is that thing has no technical structure behind it, so it's really hard. But yeah, Swiss yen will be very, very wise to participate in once you start to see that intervention actually happening, and you can see, okay, like it's actually worth. I think a lot of money will actually flow into that Swiss yen trade to the short side. But just pulling up my chart here real quick. Here, let me go ahead. Oh, sorry. Okay, Swiss yen. You can see that it is just crazy run up there. There's really nothing to really guide you as far as a technical structure goes. So, but yeah, Max, you're absolutely right. Swiss yen is out of the whole yen basket. Swiss yen is the only one that's giving you that positive swap there. So, but yeah, Marco, I'll go ahead and let you do your portion of the segment there. I know you have a DNA challenge to go ahead and give. Guys, there is EdgeFinder free week, so definitely take advantage of that. Especially in this time, it is very important that you're trading with data, filtering your trades, right? Like Marco and I discussed here. Currencies play a very specific role. You have things that like the Kiwi dollar that are really strong, but then you have the pound that's or Kiwi that's really weak, pound dollar that's pretty neutral to strong, right? So it's very important that you filter those trades and avoid those unnecessary losses, especially for my metals traders out there. I know people are very looking to participate in gold, but don't do that until you see a strong reading on the EdgeFinder. So use that to your advantage for this free week there. Definitely take advantage. I use the EdgeFinder. Marco uses the EdgeFinder. The tool has paid for itself over multiple times. So go ahead and do that, and also join the Telegram channel as well. So thank you, Marco, as always, for the great conversation, and we'll talk tomorrow.
Thank you as well. I'm looking forward to tomorrow.
All right, man. See you.
Yep. See you. So time for the giveaway. Let me post the form. So if you want to participate in the DNA funded giveaway, I have a jot form that you need to fill out. So here it is in the comment section. You're going to find the link. Just click it or copy and paste it. Go to the form, fill it out, and you'll get entered into a 10K one-phase account. Also, if you want to get funded, if you want to try out a DNA challenge, this is my personal 25K two-phase account. I passed the phase 1 2 weeks ago, I think. Then this is phase 2. I'm currently up around $728, so close to hitting the profit target. We shall see what happens. The main aim is, of course, to get a payout to pay for the funded account that I have blown. So to pay for the first challenge, to pay for the second challenge, of course, and then to make some profit on top of that to be net profitable. So I've had a great experience so far. And if you want to get funded, there's a code A1Live, A1 Live, that gets you 25% off any DNA funded challenge. So A1 Live, 25% off. Make sure to take advantage of that. And I will post the link to the giveaway one more time in case you missed it. So let me post it one more time just in case you've missed it. It's a 10K one-phase account. Checking the markets. Let me run through my positions. So Euro Swiss working out quite well, actually. Not sure why, but I'm not complaining. So this is now up around 1%. US oil is in drawdown. USD JPY is in profit, actually. Euro dollar in drawdown. And that is about it. So net, let me open my account. Let's see how the net percentage is doing. It is fine. Yeah, it's looking fine. I'm definitely overall in profit around 0.8, 0.9%, something like that. And I'm positioned pretty nicely for all sorts of scenarios, because with the Euro Swiss, I have a price floor at 0.9, which the Swiss central bank will defend. And for USD JPY, I have a price ceiling at 160, where the Bank of Japan will probably defend that level. So awesome. And I'm collecting positive swaps on Euro Swiss. I'm paying negative swaps on USD JPY. Kind of works both ways, makes it not break even because the negative swaps on USD JPY are higher than the positive ones from Euro Swiss, but it helps to soften the blow. And I can keep on holding the USD JPY sell position for longer. Stock market selling off. S&P, NAS, Dow, Russell, the DAX, of course, looks absolutely horrible. The DAX is absolutely horrible. We're back at the levels from February 2025. That's more than a year ago. Gold is down. Actually, is it down? No, starting to recover a bit on the day. BTC is break even and flat. To be honest, BTC, it starts to get interesting and then it rejects a level of resistance. So Bitcoin, I'm just staying away from crypto at the moment. VIX, a little bit up. DXY, JXY, not a lot of movement today. Not a lot of movement today. The 10-year definitely crushing higher. So the 10-year has some movement for sure. Is this the ChatGPT traded account? Yes. So this particular account is purely traded by ChatGPT. So past phase 1 of 50K, past phase 2 of a 50K, blew the funded stage, past phase 1 of a 25K, and now trying to pass the phase 2 of a 25K. Just using ChatGPT. It's a series I'm doing on my YouTube channel, but it's been working out well so far. Let's do one more chart and then it's time for the giveaway. Again, if you want to participate in the giveaway, there is a form in the comment section. Check it out. I'm going to look at the comments and see if I like any chart there. So Max loves the Swiss yen story. GPUSD, USD CAD, repricing of the euro. Yeah, the reason why I like the euro, just to repeat the things I mentioned yesterday, essentially the ECB, European Central Bank, they are looking to hike interest rates in 2026. Hiking rates going into an oil shock, going into an energy supply shock is usually bearish for the currency. Usually ends up being bearish for the euro. Same thing happened in 2008, 2011, I believe, and 2022, if I'm not mistaken. So it happened 3 times already. 4th time, I think it's going to happen again. Or at least that is the bet. There's no guarantees, but you can only look at historical data to point the way. Time for the giveaway. So today is the 24th of March. Let me see all of the entries. Let's see from the start. Okay, we have quite a few entries. That is good to see. Copy. Grab the wheel. Paste. Spin. So who will be the winner? It's a 10K one-phase account. JRJ. Yeah. So JRJ, congratulations on being the winner. After my segment ends, I will send you an email with the free code for the DNA challenge. Okay, so you can expect an email from me after my segment ends. Last thing for today. Let's see. S&P and BOJ defending Marcus' portfolio. That's the game plan. Oil. Sure, we can do oil. Oil, last thing for today before we wrap it up. I'm bullish. I have a buy position. This was a signal in the A1 Discord. All 4 trades here were signals in the A1 trading Discord. I'm bullish because I think there's not going to be a resolution of the conflict anytime soon, unfortunately. It's going to be a prolonged conflict. Even if the thing ends, a lot of oil infrastructure has already been destroyed. Even if the US wants to pull out of the conflict, Iran can keep on bombing their neighbors and they can keep the pressure on the Strait of Hormuz. They can place mines, they can deploy small boats, they can deploy assault drones or suicide drones, suicide boats. They have a lot of options to keep the Strait of Hormuz closed. So all of that for me is net bullish for oil. I think there is a much bigger chance of us hitting the high at 118 than it is for us to hit 80, let's say, level of 80. So I'm positioned accordingly. That's about it. Thank you very much for watching. Don't go anywhere because you have Tiger coming on after me. If you want to participate in more giveaways, definitely join me tomorrow because I'm doing one giveaway per stream. So thank you very much for watching. Stay safe. For all of my trades and signals, you can join the A1 Trading Discord. Discount code is Marco, which gets you 25% off. Thank you and see you.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Hope you're doing well today. Happy Tuesday morning. A little bit of a slower morning, I would say, compared to this time yesterday. We did have, obviously, Trump and Iran having their conflicting statements yesterday. And, yeah, it's just interesting. We saw that initial, big jump on risk on assets when Trump's post came out. Iran obviously rebutted that, and we pulled back, took away some of those gains on the risk on assets. And then ever since, we've just been kind of floating around sideways, I would say. Kind of seeing some wedges out there, some flag patterns, everything just kind of contracted in on itself. So I think the market, you guys tell me, but it just feels like the market's waiting on that next headline. Who do we listen to? Do we listen to Trump? Do we listen to Iran? Right. So that's what it seems like the market's been doing overall, as far as the markets I'm paying attention to anyway. So, but yeah, love to know your thoughts on that. If you guys have any different thoughts, please let me know. And as always, let me know if you have any assets that you are looking to get charted. You can definitely take a look at whatever you like. As far as today goes, it's been a morning of purchasing managers index reports, even really going back to Japan last night, or I should say yesterday afternoon. The one common theme I've noticed on all these PMI data sets is that the manufacturing sector has been performing pretty well, regardless of which currency you look at, which economy you look at, while the services numbers have been a little not so good. So yeah, I just thought that was interesting. The one forecast we had that was supposed to go below into expansion, meaning under 50, was really that which one was that? Yeah, the German, the Euro side. Okay, they had forecasted the 49.6, but had a really nice surprise. So just thought that was interesting. Yeah, currently pretty much all these manufacturing numbers are in expansion territory while the services are lagging. So yeah, as far as US, same thing, same theme. Okay, manufacturing up, services down. The only main thing we have left as far as high impact red folder is later on we'll get the inflation numbers out of Australia to see how they're looking in their economy there as well. So I just thought I would take a quick look. Let me see here what we got. Aussie dollar, Ngumbajan wants to check out Aussie dollar. Absolutely. Pound New Zealand is broken out, says Rebeast. Yeah, let's take a look at some of these. So Aussie dollar, I don't believe last I checked was on the list over here. So we'll take a look at the technical side of it. Oh yeah, I was looking at some correlation heat maps too. Let's do this. Let's go back over here. Let's get my two screens up and look at Aussie dollar. Aussie dollar, Aussie dollar. Aussie is one of the stronger currencies still, guys. I do believe it's what, second? Or yeah, second as far as the 8 majors is concerned. But it's gotten a little weaker. Remember, this thing was up at 83%, between 80 and 83% just a week ago. Okay, for a good 2-week stretch or so. So it has kind of eased off. I think we kind of went over that. What was it? The unemployment rate number that dropped it. But nevertheless, it's still one of the stronger currencies. So let's go ahead and take a look. Let me just minimize that. Aussie dollar over here. Side, it does feel like we're trying to roll up and over, guys. This asset, and just one big, ugly, sideways consolidating mess for a while. But of note, the dark red line, which is our ADMA, did cross below. Let it refresh. It did cross below and actually closed below the 21 yesterday. So, it closed there. But then, of course, Aussie was, favored whenever the Trump post came out, being a little more of the, risk on side. And then Iran kind of pushed it back down. So, for me, this could be the potential start of a big downtrend, but we don't know that yet. It's too neutral, fundamentally, sentimentally, sentiment analysis wise. We do obviously have some zones of demand underneath us over here. Let's go over here on the left and put on a 4-hour, see what I've drawn up. Yeah, I drew up a couple demand zones down here. We did bounce off of this one here. Okay. And then that's basically where the Trump the Trump post came out. So it's just a little too congestion-y, really a lot like everything. I mean, one thing I like to do is kind of go over here and take a look at a 1-hour chart and turn on my master pattern tool as soon as it comes on. And you can see, so this is obviously midday trading here, or early morning where the Trump tweet came out. But we've got nothing but orange boxes on the Dixie, on WTI, on Brent, on Nat Gas. Guys, I know we don't do a lot with Nat Gas in here, but Nat Gas is sideways. Gold, silver, every one of them have orange consolidation boxes. So to me, this is just nothing more than fair market value as it stands, at 9:23 a.m. Central Time today, where I'm at. Not even, even a little bit on the VIX, and then we get into the indices, some orange boxes. I mean, this is just nothing but one big consolidation party. Now, obviously, the indices just opened, and it looks like we got some lower gaps. Even taking a look at the 10-year yield, kind of went sideways. So I say all that to say that this is just basically the market participants trying to decide what we're doing. Are we breaking to the north? Are we breaking to the south on all of our favorite assets? We're just basically waiting to see 100% which side is accurate, Trump or Iran, right? So that's kind of the way I see it as we stand. But let me take a look here. So yeah, just going back to to Aussie dollar, it's just wrapped up in all the other assets. I mean, it's just getting that consolidation. Okay, there we go. Now we are bouncing into a zone of demand almost, but the thing is, I don't like the zone because number one, there's 2 reasons. Number one, this demand zone down here was created as a result of bouncing off of a previous demand zone. So remember, when I look for supply and demand zones, I want them to create themselves. I want an institution, I want a big bank to pick a spot out in cyberspace somewhere, meaning it's not affected by any previous zones or tops or lows or swing high, swing lows. I want those zones created in its own space. That's where I personally have seen the best success in supply and demand trading. But as you can see, we bounced off of that. And not only that, but we did not break a structure. So I'm not interested in this zone at all. I just think we need more information, especially since that asset has given us, if I go to my neutrals, I do believe it's, where are we at? Aussie dollar. Yeah. 0. I mean, that's as neutral as it gets. You're getting a -1 for the technicals, a +1 for the sentiment, and then a straight up 0 for fundies. So I just think there's better assets out there in my humble opinion. Pound New Zealand broke out, you said. Yeah, let's go have a look at Pound New Zealand. I know that that's on our list. Now, remember, pound is one of the weaker currencies. So we've got Pound New Zealand at the very top. But keep in mind, where's the pound over here? It's at a 40. So it's just not as strong as I like personally. And I'm matching that up with the weakest currency. So that is a good thing. Okay. Any chance we get this week to sell the Kiwi, hop on it. I personally would be preferring to go to the Kiwi dollar shorts, the Aussie Kiwi longs. Okay. That's just my personal favorite. Euro New Zealand longs. But pound Kiwi, that's two weaker currencies. So we'll just take a look at it anyway. Where are you at? Where are you at? You're hiding from me. There you are. All right, there you go. So we had a big, lovely downtrend. We had that basing. So this is just nothing more than a big, drop base rally, right? So we're rallying up. Our 8's above our 21 EMA. We're blowing through former support and resistance lines left and right. Let's have a look at a 4-hour on the left side over here. Consolidation. I would say it's not really broken out unless we break this structure, in my opinion. That's 2.303 area. We're still about 30 pips away from it. I just look at this as a consolidation. And I got to be honest, I dislike all of this demand zones down here. I mean, unless we come all the way clear to the bottom here. But even at that, I don't know. Let me zoom back out. Okay. So we did bounce off of a former consolidation box. We got a 50% line coming out. That is essentially where it took off after getting, riding the 200 EMA as well. So broken structure. This is our, the way I see it, this is pretty much our current. Actually, I could just draw that in. To me, when I look at this market, this is the current. I picked the wrong one. I need my highlighter, Tiger. This is the current impulse leg. Because we go from this swing low to the swing high. Remember, it's an impulse leg because it broke structures. So it broke all this, all these wicks and bodies over here. We get a retracement, and then we're currently inside of this impulse leg. So I say all that to say that the move within this impulse leg may have already happened, because where did we reverse down here? Well, let's take a look. Let's get that out of the way. It looks like we might have bounced into a little bit of a zone structure down here. Let's go down to a small, higher time frame. Yeah. So basically, essentially what happened on pound Kiwi, in my opinion, is we've already bounced off this zone of demand. And that's partly why we're getting the push up. So I say all that to say the move, in my opinion, has already happened. I would basically want to see a brand new impulse leg and then look for a demand zone created within. Now there is another demand at the bottom. Now this is the origin of the overall strong move up. So yes, there is another zone down here. And let me get my magnet turned back on, get this drawn up for you. Get down there. Okay. So I would see that as another zone of demand, but we got a long ways to go. We're talking 100 pip drop. And by that time, I don't know. Do we have anything on a smaller time frame? Go have a look. 30. And maybe see, that's just too congested. Although it is the 50% median line of the master pattern consolidation box. So perhaps this could be a little bit of a support, a little bit of a bounce up, just call it 2.29. Okay, a little more of the psychological number, but probably better assets. I mean, yeah, it is the strongest EdgeFinder signal, but short of going into some smaller time frames in a leg that has yet to break a structure, I just don't like it. I really don't. Hope that helps. If it doesn't help, I'm sorry, but yeah, I just think there's better ones out there. If we get a breakout, though, if we break the structure, okay, well, then to me, that would define this leg as an impulse leg at this point. But we have to break this structure, in my opinion. Break this structure, and then, if we close up here, anywhere up here, and then retrace, well, then we can see about trying to locate a newly created demand zone. Maybe we get one created from here. Remember, a proper zone has got to have an acceleration gap coming out of it, meaning it's left in inefficiency. Inefficiencies are king. Inefficiencies typically mean there's unfilled orders on the opposite side, which is our supply and demand zone to buy and take price the opposite way. Oil. I see oil on the list up there, pretty well neutral as we speak. I think we're just basically waiting to hear out of, again, I don't want to sound like a broken record, but we got to, it would be, I think, a little on the unwise side to just go be placing big orders right now in oil, only because we need some verification. Now, at the end of the day, it depends on who we want to trust. Do we want to trust the president of the United States, or do we want to trust a news organization in Iran that has been known for propaganda? Remember, they were the arm of the IRGC and come up with all kinds of crazy stories. I actually looked that news agency up yesterday and looked at a bunch of crazy propaganda pieces that they created in the past to sway public opinion on various current events and things. So I don't know. I don't think I personally trust them. I personally would prefer to, hopefully we can stick to the word from the president, but I just think we need a little more information out of that for oil. Let's go have a look at it nevertheless. Consolidating. Okay, we did get the big drop on that Trump tweet. And again, I echo what I said on the outset. Everything's just basically going sideways. Now we are trying to break out. Okay, remember the Iran response came and pushed markets back up. So a little bit on the risk off side temporarily, but then we've just been going sideways. So this is what I'm talking about. We're basically getting this, I don't know what you guys want to call it, pennant, triangle, whatever you want to call it, but basically we're kind of getting squeezed in here. So I'm personally waiting to see what happens. What happens when we leave either the top line or the bottom line, because we know we're going to get buyers and sellers step in on both of those. So, we could be getting all kinds of craziness. Bounce here. Maybe we finally break. Maybe we get a retracement back up like that. Okay. Maybe we can find a new demand zone, which I don't see one. Let me turn my order block tool off. Or not my order block, my master pen. See, we had a zone of demand back here. This was the middle of the Asia session, but what happened? Price broke structure. And I personally would have been more interested in seeing it break this structure up here. But it did break this, you can call it a minor structure, retraced, collected unfilled orders, and now, as you can see, we're pushing up. So even though that was just too squeezed in for my taste, it just goes to show that these zones do work. So yeah, I want to see what happens when we break this, when we break this white line. In fact, I'm going to move it up here just so I can incorporate these wicks. What happens what happens? Okay, we're going to push out, get a retracement. Maybe we could buy off another bounce off the trend line. I mean, I don't like to do that because there's not really any good demand zones there in my opinion, guys. Going down to a 15. Yeah, see how lazy price is moving up? Okay, even back here, moving up, and it's just real lazy. It's not like it's shooting up. We're not really getting any expanded range candles going up. They're just lazy. They're just a 45-degree angle with tiny candles. This is a 15-minute chart. I just don't like that. I would have preferred to see these types of candles back here. Again, expanded range candles. Candles that are bigger than the average candle around it. Aussie Kiwi is your long on that ASIN. Okay. So yeah, Aussie Kiwi and Pound CAD for you, technical trader G. Let's go have a look at those. Aussie Kiwi. I do know Aussie Kiwi is on our list at a +6. So let's have a look. Let's go looky here. Got a big retracement yesterday. Let's go 4 hour. Last few days, actually. I've got an eyeball on this zone down here, this first green box, because this is the origin of a pretty nice strong move up. You can't argue against these. Look at that. That's a whole bunch of green candles in a row, save one day, or 1 4 hour block, I should say. So that's what, 2-3 days of awesomeness. Okay. This zone broke structure. You see that I had drawn this zone up here, and I wasn't going to take that no matter what, no matter how good it looked, because why not? Why the hell not, Tiger? Well, this zone was created above a former resistance point. I prefer my zones in this particular type of a structure to be at least at, but preferably a little below the structure point. Because to me, that's just a little too expensive of a price. I got to start seeing a different set of eyeballs jump in on price whenever it comes down to it. So I did not like that. And as you can see, it just chewed right through it. That was to be expected. I did not get a signal. So for Aussie Kiwi, to answer your question, yeah, I'm looking at a retracement down here. Now, where did I put my alert on this thing? Oh, I don't even have an alert. Okay. Yeah, I need to get my alert set on. Thank you for that. Thanks for reminding me, Tiger. You got to put an alert on this thing. Okay, I'm just going to throw it out through the end of Friday. 1600 my time is when the FX closes. So we're going to get that set right there. Okay. I like it. I like this price area. I really do. Really nice retracement just below the 119 psychological number. Go a little deeper, because at that point, if I'm a bank or an institution, I know that people are going to be buying at 119, since it is a nice big round number on the hundreds. I want to go a little deeper, collect some of those stop losses, and then ultimately the unfilled orders before lifting off. So that's what I would be looking for. Just give me about another, what is that? About another 50 pip decline or so. And then I'll be looking for a buy like that. This zone is pretty much, it's kind of a former resistance point as well. I would say that's a minor one, nothing too major. But resistance that dropped, and then we bust through, and then we just kind of reestablish ourselves on this, on these, the tops of these wicks and real bodies over here before lifting off. So I like the candle of last resort on a 4-hour chart. Now, since it has come a long ways down, because think of it, that's what, a 200 pip drop from the tops. What is that? Let's go calculate that. Okay, give or take 250 pips, give or take. So think about it. That's a very long decline. Now, anything under a 4-hour chart is going to give me a downtrend, right? Lower lows, lower highs. So when price bounces in, normally I would look for a 1-hour bullish close coming out of that zone and then buy the breakout. In this example, though, I would probably just make sure and wait for a 4-hour candle close. A 4-hour bullish candle up, and then buy the breakout of that, assuming everything looks good. Just because of how far down it's come. And the fact that, like I said, if we go to a 1-hour, lower lows, lower highs, obviously anything lower is going to be the same, guys. So that's where I like Aussie Kiwi. Do hope that helps. Is giving us a nice +6 score on the EdgeFinder. I do have a daily 4-hour, but it's much deeper. So, kind of like we all talk about, maybe you put in a small position here, a couple more small positions. Ultimately, I think this is the highest probability, but that's a long ways away. And with a +6 score, with the strength of the Aussie dollar and the weakness of the Kiwi dollar that we have going on, it's probably not going to get down there, guys, unless we just have a major S show in, Aussie or the Kiwi on a positive side. So that's my play on that. We also had pound CAD on the request. Yeah, let's go have a look at pound CAD for you. Pound being one of the weaker currencies. The CAD is pretty well in the center, I believe. Yeah, it's a little on the weaker side, 42%, but not that weak. It's not really horrible. Bullish 7. Okay, so let's see. Does our 8 cross our 21 over here? That's the question. It doesn't look like it's quite gotten there. Yeah, see, actually it is. Okay, so it's 2 pipettes. Oh, we're down to 1 pipette. I like using the word pipette. Doesn't that sound fun? So pipette, guys, we're basically at even on the 8 and the 21 as we speak. I would prefer to have a close, have the daily candle close so that I 100% see the 8 above the 21. And if that's the case, great, because I've got some zones of demand down here. Got 2 of them. So this is a zone on top of a zone. And let's see here. And I think I might have went over this yesterday. So what I would like to see is price actually come in and take out the zones, the supply zones overhead, because we have a daily, we have a 4-hour, and that white dash line is a 1-hour. And there's also a former support resistance line there, that blue dash line. So we got a lot happening right there, guys. I would definitely expect to move back from this point. Come back down. It's going to drop about 200 pips or so. Got a couple zones. Now, this one's a 1-hour ahead of me, or that I'm in now. This one down here is my stronger one. So perhaps, perhaps we just combine these zones. A zone on top of a zone all off and just do this. Let's get our box. Zone on top of a zone. And just make that one big zone like that. So I've got a 1 hour zone set of eyeballs. Okay, let's go down on 1 hour. Okay, we can see this candle here, indecision candle, before the obvious Trump tweet came out, and we got that big risk on spike. Because remember, the pound, the euro, the Aussie, the Kiwi, those are some more of your risk on type currencies, right? So I like that. I really like that a lot. That's a 1 hour. Now, if it goes a little deeper, again, we got a 1 hour, 4 hour, because remember, that showed us a 4 hour. But we also have a 1 hour inside. That's that white dash line. So I really, really love that area starting at 182.6 level, we'll call it. And then you put a stop loss, 181 3/4. So it's giving you quite a wide, that's quite the wide range, for a stop loss, but it's giving you a lot of wiggle room. And as far as you take profit, and to go back, and this is how I'll wrap this up, this is why it's important to bounce into the zone first, to start taking out this liquidity from these zones over here to the left. If we take this liquidity out, well, then that opens up the take profit to where I can, comfortably go to the tops of these candles and ignore the zones at this point. If price from where it's at now does not touch the zones and it comes down, well, I would have to put my take profit ahead of the supply zones. Okay. But again, if we come up and take that liquidity out now, well, then I'd be comfortable putting my take profit up here at the swing high. Hope that helps, guys, on that. Let me see what else we got. Yeah, Aussie Kiwi, pound. Okay. Awesome. And then, yeah, just a couple final thoughts as far as what I'm watching. Thanks for the Aussie Kiwi, guys. Appreciate you guys. I'm watching a Tesla play. I know this is a Forex channel, but I'm keeping an eye on a Tesla play because I've got my downtrend in track. The stock box over here is giving me a bearish signal on Tesla at a -7. Okay. Save a couple sentiment readings. You've got, look at that. You've got all the financial readings going against this thing. So, whether this sounds crazy or not, I may be taking a stab at this thing short. I mean, I got a daily supply, and then I got a couple 4-hour supplies. This one being the closest to the origin of the overall strong move down. And it has not touched the demand zone, and that's what's important to me. So I know, again, I know this is a stock, but I'm just looking for a simple retracement into here for a short. And then we got a 1 hour confluence as well. So we'll get away from the stock land. I'm keeping an eye on EuroCAD. Okay. I kind of like the picture on this, except for the fact that, again, we have not proven our moving average crossover on the 8 and the 21 on a daily. So that's kind of a bummer, but I do like some zones of demand underneath. This is almost, well, now that I see it, I guess it was created from a former demand. So I take that back. That might open up this zone down here. See, this demand zone that I was getting ready to, rave about was created from bouncing into a former zone here. But below it, here's a zone that created itself with a lot of volume spread analysis activity, a lot of institutional type, transactions. So this is actually going to become my new favorite demand down here. And the cool thing with that is, and just for kicks, I'm going to leave my alert there at the 158.11 area. I still want to see what happens, if it bounces in. If it bounces in, it gives me a strong bullish engulfing candle. If it gives me a candle with a wick, if we start seeing the institutions pile on, by utilizing the VSA, the volume spread analysis, I still could potentially take a buy here, but just maybe not a full position size. Okay. So that would be a play there. Now, if we pierce through it and it doesn't look like we're catching much of a bid, this becomes my favorite entry right here. Okay. So that's my euro. Oh my gosh, it's already 9:45. Ladies and gents, at the end of the day, just to wrap up, Yeah, no trades on at the moment. I do have a handful of alerts. Aussie strength, dollar strength, Kiwi weakness, Swissy weakness. We are in those consolidations, like I mentioned, over basically all the assets that we're tracking. So I'm personally just waiting to see, see if we get any more geopolitical headlines come out and see if we can finally break some of these fair market value boxes that we've experienced over the last 24 hours. So if that happens, we wait for the breakout. I'm personally going to wait for a retracement to a zone of demand or supply if it's breaking out on the bottom and go with it. So with that, ladies and gents, I think we've reached the end of our show. Have a wonderful Tuesday, and we'll be back tomorrow. Peace.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.